Okay, what's going on? It's January 11th, about 2:30 in the morning. I decided to take a look at the Bitcoin charts before I turn in. And looky here, looky here. Has everybody that wants to take profit taken profit? That's the first thing I want to know. And it looks like they have because, as you can see, hit a low of 32,506, and it's on its way back up to 33.8, 33. Oh, I could just look right here. Bitcoin is currently 33,931. Okay. After seeing a run like we've seen the past couple weeks, or even just since like the 2nd of January, you have to expect it to pull back. And, I've been speaking to some people who are new, and they were completely and totally elated that their money moved so fast. But it's the same concept. Whereas these are unrealized profits or unrealized losses. So I've been running the bots. The bots been doing pretty good. My trading algorithm has been doing excellent up until probably the last 4 or 5 hours where it shut down, and now I'm in the red. But I'm up so much, and this is crypto versus cash. Bitcoin, Litecoin, Ethereum, Chainlink, and EOS, and BNB. So those are the positions that I'm holding right now. Bitcoin, Litecoin, Ethereum, Binance, EOS, and Chainlink. Okay. I believe some Bitcoin Cash as well. Everything that should be up here on this chart is what I've been watching. So, but I'm up so much at this point. I almost doubled my money in the last few days. So I'm not really concerned about the drop because those are realized profits because I'm doing crypto versus cash. Some on another algorithm, I have some other trades going. I have about 50, 53, 54 open positions against Bitcoin. Pretty much the same selection of cryptos. And I've been holding some of those for over 100 days because even though against Bitcoin, they're losing value, but overall, in the grand scheme of things, my position gets larger, cash value. So if I wanted to cash out, of course, I could have realized the gains dealing with Bitcoin. But since I've been doing this since 2013, I know that what gets me and the way that my mind works and the way that my emotions dictate how I allocate my funds, that it's best for me to have a set of trades going versus cash and a set of trades going versus Bitcoin. And I was thinking about opening up another position versus Ethereum, a smaller position, just so that I can accumulate the things that I wish to accumulate the most. So my Bitcoin stash is by far the largest. The cryptocurrencies versus Bitcoin is by far the largest, and my goal there is to accumulate Bitcoin. So under no circumstances would I sell something. Like for instance, I have a position in EOS where EOS was about 300 satoshis. And I looked on the chart today and EOS is 61 satoshis. So am I going to sell that and give away the 240, 239 satoshis with the hopes that Bitcoin would continue on its run? Or do I leave it where it is with the hopes that if I leave it where it is, at some point it's going to reach that Satoshi value and I will succeed in accumulating those extra Satoshis. I will get that value plus 5 or 10% on top of it and continue with the trade. So it's quite a few things that are in play here if you were prepared. Now, am I upset that I didn't have as much as I would like in the crypto versus cash position? Definitely, because I didn't expect this type of run. And I could have accumulated a large amount of money, a much larger amount of money, if I had played that position heavier. But at the same time, I have to err on the side of caution because I've been through this so many times that I know that at some point on a run like this, you are going to get stuck holding a bag. You will be holding some bags, and you don't want to get caught holding more bags than you're willing to take a loss on. And so I'm kind of at that point where I have made enough that if the market was to take a tumble and stay down, that I would be able to take what I've earned on the cash side, throw it right back into the algorithm, because instead of me compounding, as I earn, I was holding back a percentage so that I would have a reserve when this occurs. So if this appears to be the bottom, then I may take a portion of that reserve, maybe 20%, 30%, and throw it back into the market to keep the algorithm fed so that I continuously have some money in motion and I can buy back in, and the algorithm can buy back in at the appropriate prices so that if it does rise again, I'm in the game. I don't have to wait for it to go back up 20% to get back in the game. Because we took as you can see, Bitcoin is down 17.35 right now percent. I don't have to wait for it to go back up 17% plus another 2, 3, 4, 5% for me to get back in the game. I have the cash on the side to throw in to get me back in the game, because the game is just to, one, increase the amount of funds that you have in circulation and raise the bar on that cap. So for instance, if you have, let's say, $1,000, right, cash, and you put it into an algorithm, I will only allocate $500. So that's all it would go up to is $500. So if you catch a run and it runs up, you don't throw your $500 in to catch the run. You wait and accumulate the profits from that run. And then when it takes a dip and your bags and your crypto gets stuck because it took a dip, so you can't trade to the upside, and it takes a dip, you throw that cash in and allow the algorithm to buy in at that lower price. At that point, you can do a couple things, which I usually don't do unless I get desperate. One is merge orders. So if it buys in at a lower price, Say for instance, it buys in Bitcoin now, I would take that and merge it with the other order, which they would call something like DCAing, so that it brings you closer to zero or profit. At that point, which I don't do that unless I'm desperate. Most of the time, I just hold the bag and add more funds in the same way that you would dollar cost average in. I dollar cost average into the market, into the algorithm, into the trading bot. Okay, sorry about that. Oh man, that was bad. Okay. So, what I was saying is that you allocate those funds to the market as you dollar cost average those funds back into the algorithm so that you can continue to trade and continue to generate profit. You see, people use a lot of different strategies. I tend to use the strategy where I'm not looking for huge gains. Some people are looking for 10x, 50x, 2x before they sell. I'm not. I'm looking for anywhere from 3 to 10% consistently all throughout the day and night. And they say, well, what about trading fees? What about trading fees? Consistent profit. Consistent realization of profit is better than waiting for a big rush. Yes, you may have 10,000. You might get 10%. I mean, you may get 10x. But while you were getting 10x on $1,000, I was getting 3% on 3% a couple times a day on $1,000, then $1,020, then $1,050. Then you understand what I'm saying? So I'm getting that exponential growth. So as I move along, say for instance, if I set where I only have the limit of 10 positions or 15 right on the cash account, I'm only allowing 15 open positions. So as my account grows, so does the size of my positions. So I start off with a position at $70, and it goes up to, as I make money, it goes up to $80, $90, $100, $150, $250. Then I set my cap, accumulate profits, and my positions are much larger. So when I go back to trade, when trading resumes, when the market reaches that point again, my positions are so much larger that and the frequency of the trades continues that the trading fee doesn't even matter. So, and they talk about, well, what about taxable events? What about taxable events? No matter what you do, if you go to the store and buy a piece of candy, you're going to pay taxes, but does that stop you from buying the candy? You understand what I'm saying? So if I wind up breaking off pieces, if they lay down this tax structure where I have to show all of these hundreds of trades, okay, it's going to be the same amount whether it's hundreds of trades or if it's 30 trades for a huge amount. The tax amount is going to be the same. You want to play and wait for a year? Are you seriously thinking that I'm going to let these people control the money that I'm making? I don't think so. I'll pay the taxes, or I'll fight the taxes, or I'll find a deduction to offset the taxes. Whatever is necessary for me to do is what I'm going to do within the law. So, since the market is moving up and down, they interrupted me and look, broke it. Broke the candle. We were moving upward. So it seems like we're setting it wants to be under 35. I want to see what happens tomorrow morning when the traditional people wake up and decide to re-enter this market. If who ran out? You get what I'm saying? Who's running out? Who is taking profit? Is it the big boys? Or is it medium-sized boys? Or is it the soccer mom? As CB News would say, is it soccer mom? I'm not sure. But we will find out in the morning. If this thing jumps up in the morning time, then we know that it wasn't Wall Street. But you know, as I've been saying for years, this market is heavily manipulated by big fish. So someone who sold at 40 and buys back in at 34 or 32, they made a good profit. They made a great profit. If I was in a position where I had something on the exchange where I could have short, I definitely would have shorted this. But I think it's going to linger somewhere around 35 for at least maybe a day. But I'm probably wrong. It's probably going to come back with a vengeance. So I've been speaking for a while now. And I just want to say, buy the dip. I'm just not sure if it's this one, because it may retrace a little bit further down below 32. We may revisit the 20s. And if so, that's fine, because pretty much every 85 to 90% of my positions were bought well below this. All right, that's it. I'm out. Peace.